Welcome to Explain the Charts, where we break down the complexities of the market for you. Today, January 31st, 2025, we will be taking an in-depth look at the S&P 500, tracking its price movements and attempting to make sense of what's happening. Recent news sources like Yahoo Finance and MarketWatch indicate a positive sentiment surrounding the S&P 500, largely due to the positive reaction to the Federal Reserve's latest interest rate decision. These factors provide some context to the technical analysis we'll be discussing. Let's begin our analysis with the daily chart. We see an upward trend in the SPY price, suggesting positive momentum for the stock. There appears to be a break above a previous resistance level. However, we should also look at the volume. The volume has increased slightly, which is a positive sign, confirming the price move, but the increase isn't massive. It is important to not only look at price movements, but also volume to confirm whether there is sufficient strength behind these price movements. We'll examine this more closely in our 1-hour chart analysis. We need to check for other indicators to ascertain the actual underlying strength of this uptrend. Now, let's switch to the 1-hour chart to gain a finer-grained understanding of the price action. Zooming in on the past 24 hours, the candles illustrate the short-term volatility and price fluctuations. The 1-hour chart also shows the increase in volume in shorter time frames, consistent with the daily chart, which generally suggests strong market conviction. However, we need to be cautious. Short-term price movements can be very volatile, and there might be significant short-term reversals. Considering the 15-minute chart, we can see that the recent price action has experienced some short-term fluctuations, suggesting some indecisiveness in the market, although the overall trend is still up. The increased frequency in price swings is normal and is expected in this volatile market. The short-term price fluctuations don't seem to indicate a fundamental change in the overall upward trend. Therefore, the upward trend still holds at this point. However, we need to monitor for any emerging indicators that might change this analysis. Looking at the candlestick patterns across all the charts, we can spot some clear trends and reversals. The bullish momentum is evident with higher highs and higher lows. However, there are small price fluctuations that need attention. These reversals might suggest that the market is taking a breather before continuing the upward momentum, which would confirm the upward trend even further. Let's summarize the key price levels. The recent upward trend suggests the price could potentially test the 605 level in the coming days. This could be reinforced if volume continues to increase. However, a sudden drop in volume combined with a bearish candlestick pattern could signal a potential short-term reversal. A break below the 600 level could signal a shift to a bearish trend. On the short term, it seems that the market is somewhat indecisive. However, the long-term trend is quite positive and bullish. In conclusion, while the overall trend for SPY appears bullish, based on the current data, short-term volatility and potential reversals cannot be disregarded. Therefore, we need to carefully monitor volume changes, candlestick patterns, and other indicators on all time frames before making any trading decisions. Keep an eye on the 605 and 600 levels for potential support and resistance, respectively. Always remember to trade cautiously and according to your own risk tolerance and trading plan. This analysis is not financial advice, it's for educational purposes only.